Tesla's stock was down about 5% today, falling almost 1% as well here in after hours. What are the important downside levels you need to be watching for, and how bad could this realistically get? Well, the option activity might give us a little bit of an insight. The bears were out today, and they were hunting for Tesla. You've seen over $1 billion worth of option activity, with a positive order value of 25%. We'll break down exactly what that means and where these option buyers are targeting. Maybe this can give us an insight to where Tesla stock is going to go. But we do have some big catalysts throughout the rest of this week, including one big catalyst here in about the next 2 hours, as well as the Apple event starting at 8 p.m. What historically happens after Apple events is, well, not great for the markets. So we have a lot to get into on that front. We are going to get into some Tesla stock news, as well as some very interesting charts. And I'm going to let you guys know where I really plan on buying Tesla heavy, where I think the stock might stop falling at and find support. If this sounds like a video you are interested in, growing your net worth, reaching financial freedom as quickly as possible, well, stay tuned, because hopefully this information helps you make more money. And good news is, it's free 99. It costs absolutely nothing to hit that like button and help push this information out to as many people as possible that I can guarantee you need to hear it after today's 6% decline. So the first thing we're going to start with is today's option activity numbers. I like to look at options, in case you guys don't know, because it can help kind of tell you how people are positioning, or in this case, really big money. Big money is pretty stupid sometimes, so don't always listen to big money. They will steer you wrong. In this case, you have a positive order value of 25%, meaning 25% of the dollars heading into Tesla options today were bullish, 75% of which were bearish. The total dollar amount today bought in Tesla options was $1.42 billion. If you guys don't know, bullish options would be buying calls or selling puts. Your bearish options would be selling calls or buying puts. So there was a lot of selling calls and buying puts today. And if we take a look at the bubble chart, what is actually interesting here is that option activity that we just went over, that's hedge funds and institutions. They were like 75% bearish today. But if you actually look at the total number of options, the total volume of options, whether they were bullish or bearish, they were actually bullish. So your big money right now is bearish on Tesla. Retail investors are bullish. The volume on the call side today was 58.19% positive on the call side. Your puts was 41.81% to the put side. Your open interest is about 50-50. About 50.89% on the puts, about 49.11% here on the calls, with a put to call ratio of a little over 1. It's higher than what we normally see with Tesla, but it's nothing to be too concerned about. But if you take a look at the actual strikes in which some hedge funds and institutions are positioning around, the 220 call continues to be very active. These expire by this Friday. So that would be quite a move from today's levels of around $195, $196 per share. Today you had volume of 53,000 for the 220 call, with open interest of 43,000, almost 44,000. Another very active option today was the 210 call. You had open interest starting off the day at 11,000. You had volume today of 114,000 contracts that were traded. That's egregious. I mean, any given strike over like 50,000 is high. Anything over 100,000, you rarely ever see that. If you look at the 215 call, you had open interest today of 13,000. And volume of 66,000. I like to point this out as well, but anytime you are seeing this where the open interest is so much lower than the volume, and the volume so much higher than the open interest, that tends to be a sign that a lot of people are buying those options. If you take a look at the put side of this, not that many puts actually being bought relative to the calls. The 190 put had about 48,000 for volume. The 200 put had about 32,000 for volume. The 205 put had 31,000 for volume, and the 195 put had 40,000 for volume. Again, that's nothing compared to what you're seeing on the call side. Even this call, the 212.50, had 47,000 for volume today. The $200 call had 71,000 for volume today. The calls are winning here. So if you are a Tesla stock investor, maybe you are holding out for lower prices to start buying Tesla. This is not financial advice, but maybe we're not going to go all too much lower. I think the course ahead for Tesla really depends on the broader markets and the events in which will be happening today and throughout the rest of this week. One of the major events that is going to be taking place right about now is the Apple event. About 75% of the time Apple introduces a new product, the stock actually falls the next day. According to Dow Jones market data, shares of Apple on average fall 0.2% the day of or the day after an iPhone announcement, really a new product launch in general. But the stock tends to rise an average of 2.8% between the announcement and the new smartphone's release. In this case, it really goes for any product or any event. And Apple stock has done exactly that. From the low that you just hit on October 26th, that was last week, Apple stock has risen about 2.5% heading into this event. Here on After Hours, Tesla stock is down a little over 0.25%. Apple is 11% weighting in the NASDAQ 100, the QQQ. A lot of you guys probably trade that. So when Apple stock falls or rises, it affects the broader markets. And we did notice something very particular today. Apple got a lot of rejection around its 200-day moving average. So it could be primed for that sell-off back down. If this event goes well, then Apple stock, if you break above the 200-day moving average, well, that could send the stock higher, and that could send the broader markets higher, and thus help Tesla. But that is obviously far from a guarantee. If I were to say so myself, right now, the chart looks pretty bearish. The second big event that we will have tonight is at 11 p.m. Eastern Standard Time. You're going to get the Bank of Japan interest rate decision. Now, we got new information on this today, so it's probably not going to come as a huge wild card, but it still can affect the markets a lot. And I expect that it will. That is because the Japanese yen has been coming under a lot of pressure lately. You're sitting at pretty much a 5-year low. And what the Bank of Japan just said, well, it will affect our markets. It will affect the dollar. That's the bottom line. The Japanese yen climbed to a 2-week peak against the dollar on Monday after a report said the Bank of Japan is considering tweaking its yield curve control policy to allow the 10-year Japanese government bond yield to rise above 1% when it concludes its meeting on Tuesday. Currently, the BOJ maintains a negative 0.1% short-term interest rate target and a 0% cap on the 10-year bond yield. So when the bond yield starts to go higher, the Bank of Japan basically goes out and starts buying bonds to keep it at 0%. Now, the Japanese yen, this might come to you guys as a surprise. It is the third most traded currency in the foreign exchange market, and it is also widely used as a third reserve currency after the US dollar and the euro. Japan is the third largest economy in the world as well, and they do see very low rates of inflation. That's why a lot of people like to use their currency as a safe haven or really a store of value. But lately, the yen's been losing a lot of value to the US dollar. And that's because we've been raising rates, trying to restrict the flow of capital to make capital harder to get your hands on. And Japan is like the last developed country in the world to move their interest rate policy. And I don't want to get too in depth on this just because there's so many different aspects of how this could affect our markets. I will give you the short and sweet version of this. Basically, if Japan lets their bonds rise to 1%, that could draw money out of our markets. That could drive our rates up as well. That could take money out of our capital markets, put that into Japanese government bonds. But the thing that I'll really point out is the currency itself. Notice back here when the yen was hitting its 5-year low back in 2022. When was it? The end of September throughout October. What happened to our dollar? Using the DXY to track this, you hit a high on the dollar at the same time. So it can push the dollar higher. That puts pressure on our markets as well. And if you guys are unfamiliar on how the dollar puts pressure on our markets, think your multinationals, a Tesla, an Apple, a Google, a Microsoft, companies that are the largest companies on our markets that do business in foreign currency. They might take in yen. They might take in, the Chinese yuan. They might take in, the euro and other currencies. They have to convert those currencies back to US dollars. So look at that chart again with Japan's yen. If Apple is selling an iPhone for $1,000, right? 1,000 US dollars. Well, that conversion ratio is like 1/6 of 1 cent right now per yen. So Apple is still charging 1,000 US dollars equivalent, but now it takes a lot more yen to buy that product. Or what a lot of companies end up doing is just keeping their costs the same. So ultimately, when you convert this yen back to US dollars, you're going to get a lot less US dollars. And that's why foreign exchange really hurts your multinationals. So if the dollar goes up, that's not great for stocks. If the dollar goes down, that is fantastic for stocks. And I think as we head into 2024, that's probably going to happen. The dollar's going to come down. That's going to make earnings a lot easier to beat. And I think that can be part of why markets rally in 2024. Because don't forget, I think there is a violent rally coming in 2024. And the data would support exactly that. Last Friday, the S&P technically entered into a correction. We dropped 10%. Your returns 2 weeks, 3 weeks, and 1 month later, well, you tend to fall another roughly 2%. The week after falling into a correction, you tend to bounce about 1.5%. 3 months later, you tend to be flat or slightly positive, about 53.5% of the time. 6 months later, you tend to be green about 3%. 66.7% of the time, and 1 year later, you are green on average 10% or more 80% of the time. So when you enter into a correction, unless it is something that is really bad that's going on, you usually want to buy that correction dip. Now, specifically for Tesla, you have a lot of FUD going on. Fear, uncertainty, and doubt across the board. There were really 5 different things that affected Tesla stock today. Fears of Tesla unionizing. We did get some concerns over there in Europe. It looks like Sweden is trying to unionize some of their Tesla workers. The workers are not going for it. That is one thing that caused fear today. You had the investor relations executive at Tesla basically saying, we don't know where EV adoption is going to be for the second half of 2023. Let's wait and see. You had the UAW strike ending now at Ford, GM, and Stellantis. At least they have agreed on contracts. You had BYD that had really good earnings, honestly, better than Tesla's. And you have also seen bad solar news, bad solar energy news and earnings in Tesla. Well, that's their largest margin business now, or highest margin business is energy. So you have a lot of things that are really working against Tesla right now. And I think any dip you get is a big buying opportunity. The thing that matters the most with Tesla, forget any of that. That's just stupid. It's literally laughable, like I said in the last video. I literally laughed when I found out Tesla was down 5% off of that news. And I went and I bought 10 more shares of Tesla. And I plan to buy a lot more aggressively if we fall lower from here, but I'm not going to count on it. Once we see signs of a trend reversal to the upside, then I'll put more money to work, but might as well wait and see what happens with some of your cash. You don't want to obviously go all in at one point, but 2024, interest rates are coming down. The economy is probably going to slow faster than expectations. Tesla stock could easily hit $400 to $600 next year, in my opinion, as long as we don't see a deep recession. And if Tesla is able to raise prices, if the Fed does lower rates a lot, I guess it really depends on how much the Fed does lower rates and how much Tesla is able to raise prices. That's why I call it a range. 400 to 600, that looks, I wouldn't say likely to me because that's making a pretty strong statement, but I think that is a very strong possibility for Tesla stock. So if I can buy Tesla under 200, I'm perfectly fine with that. That is music to my ears. Now, in the near term, the Bank of Japan, the Apple event today are going to be important. And then you skip to Wednesday, and then you're going to get the Fed. That is probably the biggest catalyst that is going to send markets higher or lower. And as of right now, there's a lot of speculation, a lot of talk from analysts that we're probably going to get a pretty dovish Fed Jerome Powell. He's probably not going to hawk down on the markets and basically say we need to raise rates again. People are not expecting that. People are expecting Fed Jerome Powell is going to say, look at the long-term yields, your 10, your 20, your 30-year yields, what we cover each and every single day. And I mean, that's equivalent to 2 or 3 rate hikes alone. And that's putting a lot of stress on the economy right now without the Fed needing to do anything. So we're expecting the Fed's going to be pretty dovish, really not outline any more hikes to go from here. And that could be really good for stocks at this point, especially your small and mid-cap stocks and your interest rate sensitive companies. But let's say Fed Jerome Powell is having an off day. He says some things the markets don't like. Well, Tesla stock's in a really bad position now in the short term because you've broken all of your bullish technicals. You're under your 200-day moving average. You're under your 8-day moving average. You're under all of your important levels. So it looks like 185 is going to be a big level to be watching. That is where this line is right now. That's where you fill the entire gap that you have seen throughout the summer. Basically sends you back to spring levels of 2023. That would be a really good point to buy a lot more shares in Tesla, in my personal opinion. If the markets, for whatever reason, are seeing the nasty NASDAQ really coming out, people are fearful, then you're falling to about 170, 160. That's going to be the next big buy level. 150, I think, is going to be a very strong level of support. So you're probably not going under that. Things would have to be like really, really bad. Like really bad. You would have to probably see expectations for your GDP report start to come even more negative than where they are now. You would have to see, maybe the conflict in the Middle East get worse. You would have to see Apple have pitiful earnings. You'd have to see a really hawkish Fed, in my opinion, to get Tesla stock under 150. 130 is a possibility. 100 is a possibility if those things were to happen. I don't think that is a high likelihood, so I'm not going to sit here and say that that's likely to happen. It's not. There's probably a 5% chance that happens, if not maybe even less than that. Now, to hit 150, probably a 25-35% chance that does happen. 180, I would say, is like a 90% chance, or really 185, probably a 90% chance that happens. 160, 170, I would say that's probably a 50 or so percent chance that happens. Anything under that is way, way smaller. But here in the short term, it does look like Tesla is screaming it wants to bounce. You're under your 30 level on the RSI, which normally Tesla bounces there every single time, besides a brief period here for a couple of days in October of 2022. Granted, remember what was happening to the markets at that time, as well as January and, early January, late December of 2022 and 2023, when Elon was selling a lot of stock to buy Twitter, and nobody thought that Elon was really running Tesla. A lot of BS really synthetically push Tesla down to $100 per share. That's why I don't think it's going to happen again. And you're probably going to see a bounce here, but we've seen crazier things happen, so anything is possible. But again, I did start buying my first tranche of Tesla stock here today. Anything under 200 is a strong buying opportunity for the short term as well as the long term. The next 3 months, under 200 is a good deal. The next 6 months, under 200 is even a better deal. I think by then we're fully going to be appreciating stocks because of lower rates, right? Those lower rate companies are going to be doing much better than I think your big tech names. Don't quote me on that. Don't hold me to that. But I think 6 months from now, this video is going to prove to be very correct. But unfortunately, it's not all peaches and rainbows, because if you look at the SPX versus the CTA positions, basically hedge funds, institutions, financial advisors, like people that are licensed, your big money essentially, their positioning in equities is almost back down to your 2022 lows in October for stocks. It has fallen off a cliff big time, well outpacing the fall that we have seen in the market. So I would imagine a lot of this money is flowing into the bond market. We have seen a lot of that recently. As you can see here, we just had the largest inflow on record to long-term treasury funds, and those 5% yields look sweet right now when a lot of your stocks are doing poorly, very poorly for the last 2 years, and now you're able to get 5%. Yippee, you're a great investor. Okay, when that starts to shift, when everyone's making money in stocks again, which I have a feeling is not that too far down the line, a lot of this money is going to rush out of the bond market quickly, and you're probably going to see a increased rise in stocks. And if you look at this chart, the name exposure index, the NAAIM, basically showing exposure to stocks, you are down here with some of your most underexposed levels that you have ever been at. This would be like your 2022 bottom. This would be your Rona bottom. This would be your '08 crisis. This would be all of your times of extreme fear. And what's happened when you hit these levels is always positive, as you can see from these red dots. Stocks have always done better from these levels of, low exposure. Sometimes it takes a while. Let's be honest. Back here, '08 or so, it took you 4 years to hit a new all-time high in the markets. You didn't hit a new all-time high in the markets till 2012. It can take a while. I think this time, infamous last words, is a little different. We'll have to wait and see. It has already been, almost 2 years now since we have hit a new all-time high. So we're already in one of the longest downtrends we have seen in our markets for, throughout history. It's been a long time since we hit a new all-time high. Usually it doesn't take this long after a downtrend. And just to add some statistical probabilities to this, whenever you hit these oversold levels on this exposure index, you are positive 3 months later, 86% of the time. 2 weeks later, you're positive 79% of the time. 1 year later, you're positive 75% of the time. Your median return in 1 year after hitting this level is 19.61%. Your average return is 12.67%. It's clear, no matter how bearish you are, when certain stocks look like this and when exposure to equities is this low, there's no choice. You almost have your hands tied behind your back unless you're going through some kind of Great Depression or Great Recession after you've already been in a decline and haven't hit new all-time highs in 2 years. I mean, you have to be buying something here. And I think Tesla is in the best position, really out of any name that I can think of, the highest quality, the most sensitive to interest rates. As long as inflation doesn't magically rise again, well, I don't think there's anything to worry about for Tesla. Now, I'm not a financial advisor. I'm not a financial planner. Don't hold me to that one. Come to your own conclusions. Do your own due diligence, your own research. all of that, I'm sharing my opinion here. That's it. Tesla has a degree of safety that you really cannot find with an interest rate sensitive company. And the fact that Tesla has been able to put up the numbers they have when rates have went from 0 to 5.5% within the last 18 months or so, just imagine what Tesla's going to do as far as numbers, margins, net profits, bottom line, cash flow, when rates do come down. I think that's a pretty safe assumption, relatively speaking. Now, some of the news that we previously mentioned that affected Tesla stock negatively today, this unionization fear that you have for whatever reason with Tesla, at least today. This article from Tasmanian, we talked about it a little bit in the video earlier, how Tesla workers refused to support a union strike in Sweden. Well, they have now said, quote, Tesla employees said they saw no reason to participate. They believe that their current working conditions and wages are superior to those of their previous jobs. And I did heart Clay Beatty here, this tags Elon, says, should now give them a bonus just because. I agree. Tesla, give these guys a bonus, just because. We now have more details of the UAW deal with General Motors, a 25% base wage increase through April 2028, and will cumulatively raise the top wage by 33%, compounded with estimated cost of living adjustments to over $42 an hour. The starting wage will increase by 70%, compounded with estimated cost of living adjustments to over $30 an hour. Deal brings two groups into the UAW GM master agreement at Ultium Cells and GM Subsystems LLC. GM has agreed to make 5 payments of $500 to current retirees and surviving spouses, improves retirement for current retirees, those workers with pensions, and those who have 401k plans. Agreement reinstates benefits lost during the Great Recession, including cost of living allowances, a 3-year wage progression, and ends wage tiers in the union, and also the right to strike over plant closures. And Rivian has turned on their new wind turbine at their manufacturing facility in Normal, Illinois. Rivian will soon see every new vehicle rolling off the assembly line receive its initial charge from 100% renewable energy. This has nothing to do with Tesla, but I think it's a pretty cool concept in the grand scope of renewable energy, clean energy, EVs. And now, just to add more fuel to the fire, Tesla shares dropped 5% on Panasonic battery warning, down 18% since Q3 earnings report. I don't know what's causing Tesla to fall at this point. There's so many different things that could potentially be negative. This is what CNBC wants to go with. We already called this out in the last video. Panasonic said they reduced battery production to about 60% of what it was before, and they don't see ramping up the factory to full-scale production for, quote, a long time. Obviously, that doesn't sound great, like we said earlier, but I guess whatever you want to go with fits the narrative here. There's just a lot of things that came together today that were just not great for Tesla. Futures on the NASDAQ are down about 1/3% as this Apple event continues on, and I expect this is probably how the markets are going to look tomorrow as well. Historically speaking, that's what usually always happens following Apple events. So that is going to go ahead and do it for this video. Let me know what you guys think about all of this information down below in the comment section. Have you started buying Tesla stock? Are you waiting to buy Tesla? Are you going all in right now? Let me know what you guys think about Tesla stock here over the next couple of days, the next couple of weeks or so, even heading into 2024. I would love to hear your opinions. If you guys would also like to come trade with us live in real time, come get notified every single time I do make a trade, link down below in the description of this video. Thank you for watching. Enjoy the rest of your day and night, and I will see you in the next one.